Hello and welcome to The Bullion Advantage, a podcast by Direct Bullion, the UK's #1 gold dealer. If you know us through Nigel Farage, Rob Moore, social media, YouTube, or you just want to know a bit more about gold, you're in the right place. This is a weekly podcast giving you insights into wealth, the economy, key global events, markets, and of course, a bit of gold. Welcome to The Bullion Advantage. Hi, I'm Jake from Direct Bullion, and today I'm joined by James, who has helped thousands of people learn more about gold. Well, James, thank you so much for being with me today. Tell everyone a little bit about yourself and how you help people.
Yeah, hi Jake, thanks for having me, mate. I've been an account manager at Direct Bullion for the last 6 years now. Been working in assets for quite a while, working in gold for the last 6 years. We've seen the market absolutely shoot up, which has been good. A lot of happy customers, a lot of happy colleagues. So yeah, it's been fun, mate.
Great. Well, cheers, mate. And why don't you start off by telling me what excites you the most about gold?
I'd say the most exciting part about gold is physical. Waiting for when I've got deliveries coming, waiting by the door for them to come, put them into my little stack and count them, look at them. I haven't got like a white glove and a magnifying glass yet, but I'm I'm nearly there. So yeah, I'd say the most exciting thing is actually having it in your hand, being able to stack it, watch it grow over time.
Nice. Is there anything that people really misunderstand about gold, or maybe what would you say the biggest myth about gold is?
I'd say myth. So I'd say there's two main ones. The first one is that you've got to pay tax. The amount of financial advisors that I've spoke to that don't know how tax efficient gold is crazy. Whether that's capital gains, whether that's because most financial advisors will, allocate you ETCs, gold mining stocks, which is their realm, and there's nothing wrong with it. But when you're looking at physical gold, as long as you're buying the right products, it can be really tax efficient. So if you look at 22 karat gold and above, is VAT free, so you don't have to wait for the market to go up 20% before you break even. Mm-hmm. But I think especially now more than ever, is capital gains tax. So as long as you're buying British gold coins that are legal tender in the UK, they're capital gains tax free. And a big stat that I read the other day was that if you put 10 or 100 grand into gold 20 years ago, it would be worth in or around £1 million today, probably just shy of that. I think the other day I checked, it was just over 1 million, but it's always changing. Wow. Now, yeah, I know. And if that was in a gold bar, you purchased 100 grand's worth of gold bars 20 years ago, you can incur CGT on any profits. Okay. If you're buying maybe a gram here or there, it's probably not going to make too much of a difference. But for a lot of people, especially at the minute, coming away from ISAs, premium bonds, your more traditional ways of saving, you make a lot of gain over the last 20 years, and to know that you keep that profit because it's capital gains tax free for a lot of people is wicked. So I'd say that's the first myth. The second myth I'd say is there's a common misconception with gold. People think that you've got to have millions in the bank to buy it, but we've got clients that start off from as little as, well, the last time I checked, £80 to £100 for a gram of gold. Right. So I'd say that's probably the main couple of myths, Jake.
Right. No, got it. And talking about you're making money from gold example earlier, seems to be doing a bit of a dance at the moment. I said the other day, if you'd have bought gold at 6 a.m. this morning, you'd have made 20 quid already. But today, you'd have lost 20 quid if you'd bought at 6 a.m. this morning. So gold just recently went past 2,700 quid, and it's going up exponentially. So what kind of factors do you think are contributing to this increase in price at the moment?
There's, in my opinion, a few main factors. The biggest one is uncertainty. So people love stable physical assets when everything else around it is uncertain. A good stat is, you look back to the last recession. In my opinion, it's quite similar to what we saw today. 07, 08, the last big crash anyway. We saw the pound devalue by 35%, and in that same year, gold went up 43%. So there's an inverse relationship, if you look historically, between economic uncertainty and the price of gold going up. The second one is central bank. So right now, if you look at the BRICS nations, Brazil, Russia, India, China, South Africa, they're buying like record levels of gold, and they're not buying grams, ounces here and there. They're buying tons, and that really drives the price. The BRICS nations want to be the new powerhouse of the world. They want to try and come over the dollar, and what better way to do that than buying physical gold?
Sure. Yeah, JP Morgan recently said that gold's going to reach $4,250 per ounce by the end of next year. What are your thoughts on this, and what do you think would make this happen?
Well, I think that ties in quite nicely to what I just said.
Yeah.
JP Morgan have actually just come out and said, alongside Deutsche Bank, saying there's a 50% chance that the US could go into a recession next year.
Why is that?
Well, I mean, you just look at the way the world is at the minute.
Yeah.
There's so much uncertainty. The markets are very volatile. The dollar, the pound is weakening. And it just, I think for a lot of people, they're looking for safe places to put some cash that has a proven track record of doing really well in times of uncertainty, and people are buying gold. Like I say, central banks are the biggest driver. They're literally stockpiling gold, and it gives the price, and what it's doing now indicates that it's doing really well. But yeah, I think when you look at any time, it's not just this. You've got wars that are currently happening, creates massive tension. If you spin the globe right now and pick any part of the world, you'll see tension, whether it's Taiwan and China, whether it's Ukraine, Russia, the Middle East. This creates a lot of volatility, economic uncertainty, and people just want that safety net.
So if gold's so high right now, then what's the incentive to buy?
Yeah, good question. No, I'm only joking. People, when you're buying physical gold, it's very similar to buying property. You wouldn't buy a property today and sell it in 6 months' time.
No, of course.
People have been buying properties for years, and the price of a property has been at all-time highs for years. The price of gold might affect you if you are trading gold behind a computer every day and trying to make quick gains, but when you're buying physical gold, it's not something that you'd sell in the short term. If you was buying and selling a property in the short term, you've got stamp duty, estate agent fees, solicitor costs. With gold, the reason I love gold is you don't have that. It's like an armchair way to protect your money. It's really low maintenance. It just sits there. Can be a little bit boring, but it's there to fall back on if you ever need it. As I say, really tax efficient. But yeah, like I say, the incentive to buy gold is that it's safe. I couldn't think of another product right now, financial product anyway, that you could purchase, know that it's tax efficient, has a track record of doing 12% a year over the last 20, 30, 40, 50 years.
Yeah. So tying into that, most of the time it's considered a safe haven asset. What is exactly a safe haven asset, and why is gold so often considered one of those? Well,
gold is deemed as a tier 1 asset class by the Basel Committee, and it essentially means extremely safe. Basically, they say it's risk-free. Gold goes up as well as down, but a good analogy I use with people, if you had an ounce of gold in the Roman days, you'd be able to get one of your nicest Roman robes with the nicest Roman sandals. And if you went to Savile Row in London today and wanted to go and get one of your nicest bespoke Savile Row suits, it will probably be about the same as an ounce of gold, right? So
yeah, you're probably right.
The value of gold will always stay the same. There will never be a point where tomorrow, your gold's worthless. It's a physical, tangible asset, and that's the biggest driver for most people, especially in times like this.
So I guess we should probably talk a little bit about what's going on in the world at the moment, and it's been quite a lot. Firstly, we saw Charlie Kirk. I think everyone probably saw the video. Horrible. But what are your thoughts on this? And, we mentioned about America possibly going into recession. Just give me your thoughts on that and how it could affect things.
Well, firstly, I think it's extremely sad. When I heard the news, I used to follow quite a lot of Charlie's debates, and I thought he was a really
me too.
Honest family man, really nice guy. And I was for days after, I was saddened, and still am. And I do think that the way that the world is this day and age is that's a factor in in what's happened. Yeah, I think, especially in times like this, there's a massive divide between left and right. Yeah. You know, America used to be still are the biggest advocates for free speech, but now someone like Charlie Kirk gets on a stage and, you know, there's an assassination, which I think is absolutely terrible. And I think it's not just the US, you know, you look at France now, you look at even the UK with Keir Starmer and the tweets that are being made and people are getting prosecuted off the back of it. I just think it's absolutely terrible. In my opinion, it is terrible what's happening around the world.
I just think it sets such a dangerous precedent, doesn't it? I mean, this podcast is going to go on our YouTube channel. It's no secret that Nigel Farage is all over our YouTube channel. Rob Moore's another friend of Direct Bullion. These are divisive figures, and you know, if stuff like that happening, I think it is really scary, and it sets a very dangerous precedent for this left-right divide that just seems to be getting wider and wider. It's just a bit scary. Something else to talk about is France. You just mentioned. What exactly is going on in France? Like I mentioned off air, I don't really know much. It's one that slipped through for me. So tell me a little bit about what's going on in France at the moment.
Well, the economy is on its knees alongside a number of European... I think everybody's feeling the pinch at the minute, but a lot of European companies, including the UK, are feeling the pinch. But I'll link back to the left with France. The left is very left in France, and the right is very right. And again, I think it just falls back to... The conflict, uncertainty doesn't help. You know, people uprise a lot more when the price of your everyday goods are going up, and it just makes things worse down the line. You know, I think 3 or 4 different prime ministers or prime ministers France have had in the last year, which is crazy.
Yeah.
You know, there's a huge uproar, riots, and you can't blame the people. I think it all links back to the same thing, right? Everybody's fed up at the minute. The standard of living, the cost of living is going down the drain, and people, you know, this is another factor that, you know, comes into play. Taxation. You know, some of the biggest and most wealthiest corporations are leaving the European Union, the UK, to be taxed less. And you can't blame them.
Yeah, no.
You know, you work so hard, you make X amount of money, and if you can pay less tax and keep it yourself, why not? Yeah,
exactly. How does the position of France affect gold prices? Does the position of a country like France have an impact on gold prices, or is it more about the cumulative effect of global instability?
Yeah, I think the main thing is, you know, global instability. As I've mentioned before, if you look back to any time of economic uncertainty, whether it's COVID, the price of gold shot up, whether it's the last recession, people just don't want to leave their money in traditional ways of saving because, as I said, the cost of living increases, standard of living decreases, and people need ways to protect and grow their money. I mentioned gold's done really well over the last 20 years, but the value of the pound has halved. If you had 100 grand in the bank 20 years ago, spending power would be half today.
Yeah.
You know, so you switch that and put that into gold, you'd nearly 1,000 times it, which stands out for me a lot.
Great. So you were recently at a reform conference up in Birmingham. Tell me a little bit about your experience there.
Oh wow, what a weekend! First one, really busy day. There was thousands of people there, which I think was a lot busier than the last reform event. So it was good to see. Had a chat with Uncle Nigel.
Oh yeah,
how'd that go? Which was fun. Always really nice. Really busy on the day, and had swarms of people around him. But obviously took the time to come over to us and say hello. Yeah, really good day. Spoke to a lot of people. We had quite a big stand there, giving out some brochures, explaining how gold works. And it was a really, really nice day, mate. Yeah,
good. Get a lot of interest.
Yeah, so we had a lot of applications for information sent in the post, on email. Obviously, part of what we do now is pensions. We had a lot of interest with people fed up with your traditional workplace private pensions, seeing maybe 3-4% a year.
Doesn't even beat inflation, nearly, really.
Well, no, that's the thing. And not to say gold's going to make you a millionaire overnight, but certainly does quite well in times like this. You know, if you look at since the last budget, gold's gone up over 35%. So if you had put your money into gold within your pension, you can't put physical gold in a standard workplace or private pension, but you can do it within a SIP. So we're not a pension provider, we just provide the physical gold to pension providers. There's a couple that we use, we send over to people, give them the information they need. But yeah, if you had put, you know, your pension into gold, I think it was just after the last budget, it's gone up around 35%, which is pretty cool.
Yeah, that's not too shabby.
Yeah, I mean, if you're comparing it to, like I say, traditional standard workplace, private pensions, I think it has done really, really well.
Yeah. Great. Well, James, thanks so much for taking the time to join me today. Really appreciate it. It's been a super informative and helpful chat, and I really appreciate your time. Thank you so much.
Yeah, well, thanks for having me, Jake. Yeah, always a pleasure seeing you and your pretty face. Yeah, we look forward to doing it again. Cheers.
All right. Cheers,
mate.
James.
Thanks.
Thank you. Well, a big thanks to James for being with me today. In our next episode, we'll be talking about something that a lot of people don't know, along with anything else that happens in the next week, which, let's be honest, could be anything. So you're not going to want to miss it. Make sure you hit that like button, subscribe to Direct Bullion, and ring the notification bell so you stay up to date with all our updates. Also, drop a question in the comments below and we can answer them in the next podcast. But for now, share this with a friend who's on the fence about gold, and we'll see you in the next one. The purchase of gold does not constitute an investment or offer financial returns. Gold is considered a store of value and not an investment product. Past performance of gold is not indicative of future performance. Prices and values of precious metals can fluctuate and are influenced by various market factors. Direct Bullion does not provide investment or tax advice and recommends that you conduct your own independent research before making any purchasing decisions.